Despite a growing push toward diversification, oil still drives the Caribbean's economic and geopolitical landscape. Although most of the islands remain net oil importers, the area plays a significant role in petroleum refining, transshipment, and, in some cases, production. With Trinidad and Tobago continuing to be the region's energy heavyweight, and other nations exploring ways to enhance energy security and diversify their energy mix, oil remains central to economic and geopolitical developments in the Caribbean. In this video, let's dive into the evolution of the region's energy sector, exploring the lasting dominance of oil in the Caribbean, the rise of natural gas, and the technological innovations shaping its future. Let's get right into it. Historically, the Caribbean's regional energy profile was shaped by the dual realities of dependence and opportunity. A 2003 fact sheet by the U.S. Energy Information Administration (EIA) highlighted that oil accounted for roughly 92% of the region's energy consumption at that time. Most islands imported oil under favorable terms negotiated with suppliers such as Venezuela and Mexico. At the same time, only a handful of countries, namely Barbados, Cuba, and Trinidad and Tobago, boasted significant hydrocarbon reserves. Even then, Trinidad and Tobago dominated production, accounting for considerable oil and natural gas outputs. Energy consumption has grown by 15% since 2003, but oil's share has slowly decreased as countries diversify. Even with these changes, petroleum still makes up over 80% of energy consumption in many islands, showing just how deeply oil dependency remains. Over the past 2 decades, the region's energy landscape has shifted. While overall energy consumption has grown by nearly 15% since 2003, the share of oil in the mix has slowly decreased as countries diversify. While the region adapts and diversifies, one nation continues to hold significant sway over the Caribbean's energy future. Trinidad and Tobago's continuing influence remains a key factor in shaping the industry's direction. Trinidad and Tobago has historically been the Caribbean's largest oil and gas producer. In the early 2000s, the nation's proven crude oil reserves were estimated at around 716 million barrels, with production averaging approximately 141,500 barrels per day. Declining production from aging oil fields has cut crude oil output, but natural gas production is on the rise. According to the latest national statistics, Trinidad and Tobago's natural gas production increased by nearly 20% in the past 5 years, with LNG exports now surpassing 3.5 million tons per year. Recent advanced deepwater exploration has uncovered promising prospects in both shallow and deepwater blocks. New licensing rounds have already led to discoveries that could boost proven reserves by 10 to 15% if further development goes as planned. One key project, for example, is using enhanced recovery techniques to potentially add 50,000 barrels per day from an aging field. While Trinidad and Tobago leads in natural gas production, the Caribbean remains a vital refining and transshipment hub, just as it was 2 decades ago. In the early 2000s, the region's crude oil refining capacity was over 1.7 million barrels per day. Fast forward to today, modernization initiatives have increased overall capacity and efficiency. Major facilities in Aruba, the U.S. Virgin Islands, and Trinidad and Tobago have invested in cutting-edge desulfurization units and energy-efficient process technologies. Recent figures show that these refineries can now process over 1.9 million barrels per day, with some units running at capacity factors as high as 90%, thanks to improved operational practices. Storage infrastructure has improved significantly, with independent facilities across the region now able to store over 120 million barrels. That's a 20% increase from figures reported 2 decades ago. This enhanced capacity has increased the region's attractiveness as a transshipment hub, providing greater operational flexibility amid volatile global oil markets. Despite these advancements in refining and storage, the region's reliance on imported petroleum products remains a key factor in its energy landscape. Recent data shows that imports still account for more than 85 to 90% of total energy consumption in countries like Barbados, Jamaica, and the Dominican Republic. Take the Dominican Republic, for example. The country's oil import bill has increased by around 12% over the last decade, largely due to increased transportation and industrial demand. International trade dynamics in the region have also shifted. While the historic San Jose Pact once secured favorable oil imports from Mexico and Venezuela, many Caribbean countries have since diversified their supply chains, forging new relationships with suppliers from North America, the Middle East, and Asia. By 2021, U.S. imports of refined petroleum products from the Caribbean approached 400,000 barrels per day, underscoring the region's strategic role in global oil logistics. Now, with the region's evolving trade dynamics, liquefied natural gas (LNG) has become a central focus as Trinidad and Tobago leads the way in meeting growing global demand. The country pioneered LNG exports in the region and has leveraged expanded production capacity and technological advancements to meet growing global demand. In the early 2000s, LNG exports were primarily directed to the US and select European markets. Today, with production capacity enhanced by over 30%, Trinidad and Tobago's LNG exports now exceed 3.5 million tons annually. New projects are also pushing forward with undersea pipelines and regasification terminals to expand market reach. One proposed 600-mile pipeline would connect Trinidad to multiple islands, including Guadeloupe, Martinique, and Barbados, ultimately boosting regional energy security. Despite technical and environmental challenges, once operational, this infrastructure is set to cut LNG transport costs by approximately 15%. Not to mention, the geopolitical landscape in the Caribbean is also closely intertwined with its energy dynamics. Energy import dependency creates challenges for nations like Cuba, Haiti, and Jamaica, where oil import bills make up a big chunk of national expenditures. Recent fiscal reports suggest that oil imports can account for as much as 25 to 30% of the total trade deficit for small island economies. In contrast, Trinidad and Tobago's status as an energy exporter strengthens its economic and political influence within CARICOM. Recent summits have stressed the importance of cooperative energy policies, grid interconnections, and shared renewable energy investments. A 2023 report highlighted that joint efforts have already cut oil-based power generation by 5 to 7% in certain islands, marking a significant shift. Facing the challenges of mature oil fields and evolving environmental standards, the Caribbean has seen a surge in investments to enhance exploration and production efficiency. Public-private partnerships have been instrumental in deploying advanced seismic imaging, horizontal drilling, and enhanced oil recovery (EOR) techniques. Recent projects off the coast of Trinidad have reported potential additions of 250 to 350 billion cubic feet of natural gas reserves, which represents a 10% to 15% uplift over previous estimates. The infusion of capital from international oil companies has also accelerated the modernization of extraction and processing facilities. In one notable development, an upgraded platform in the Iron Horse field is expected to increase output by nearly 25%, translating to an additional 40,000 barrels per day in peak production. These technological strides improve recovery rates and mitigate the environmental footprint of older production sites. As technological advancements improve production efficiency, the Caribbean oil sector is increasingly under environmental scrutiny, with stricter regulations and emissions standards now in place. Governments have tightened environmental regulations and implemented robust emission standards that directly affect upstream and downstream operations. Modern refineries are now equipped with advanced flue gas desulfurization systems and catalytic converters, reducing harmful emissions by up to 40% compared to facilities from 2 decades ago. Not just that, the region's regulatory bodies are increasingly integrating rigorous environmental impact assessments (EIAs) into the approval processes for new projects. Recent policy shifts have mandated that any new oil or LNG development project demonstrate at least 20% reduction in greenhouse gas emissions relative to conventional operations. Though costly, these measures intend to align the Caribbean's energy sector with broader global sustainability goals. In tandem with these regulatory changes, renewable energy investments have accelerated. While oil still accounts for a significant share of energy consumption, Solar, wind, and other geothermal projects have grown by over 30% in installed capacity since 2015. For example, several Caribbean islands generate more than 10% of their electricity from renewable sources, a trend expected to continue as technology costs decline and climate imperatives mount. Looking ahead, the Caribbean oil industry stands at a crossroads. On the one hand, mature oil fields and challenging geology limit the potential for large-scale conventional oil discoveries. Conversely, the untapped potential in natural gas and deepwater exploration offers a promising avenue for continued energy export revenues. Analysts forecast that with sustained investment, the region could see a 5 to 8% annual growth in natural gas production over the next decade. However, key challenges remain. The region's infrastructure will require significant modernization to cope with fluctuating oil prices and the dual pressures of demand volatility and climate change. Experts estimate that over the next 10 years, Caribbean nations may need to collectively invest upwards of $10 billion in upgrading pipelines, storage facilities, and refining capacity to remain competitive in a rapidly evolving global energy market. Economic diversification is also critical. Many small island nations actively explore hybrid models combining fossil fuel operations with renewable energy investments. Pilot projects integrating solar power arrays with cogeneration facilities at refineries have already demonstrated operational cost savings of around 15 to 20%. Such innovations reduce reliance on imported oil and help insulate these economies from future price shocks in the global oil market. Though the Caribbean faces significant challenges, its energy future looks promising. As the region continues to adapt and innovate, it is moving towards a more diversified, sustainable energy mix. With the growing role of natural gas, advancements in renewable energy, and investments in cutting-edge technology, the Caribbean is positioning itself for a brighter, more resilient future. Now, we'd like to hear your thoughts. Do you think the Caribbean can transition away from oil dependence, or is it too deeply entrenched? And what role will natural gas and renewables play in this shift? Drop your thoughts in the comments below and keep the conversation going. And if you're interested, you should also check out our video on the top 10 economies in the Caribbean in 2025. If you enjoyed this video and want to stay updated on the latest insights into the Caribbean's energy future, please like, share, and subscribe to our channel. Don't forget to turn on notifications so you never miss an update. This is Caribbean Focus, and we'll see you in the next video.